The EU will explore ways to raise funding as a bloc to accelerate plans to cut off Russian gas, but the plan raised by Commission President Ursula von der Leyen isn't exactly popular among some member states. This is most striking in von der Leyen's home country, Germany, which has pushed ahead with a unilateral financing package, irking some neighbors. Von der Leyen also proposed that the bloc step into the gas market to limit the price in relation to a key Dutch benchmark, which she said is no longer representative of the true cost. Such a cap would still require a broad reduction in energy usage in the bloc. The UK's credit rating came under further threat on Wednesday. Fitch put the country on a negative outlook while giving a damning verdict of the government's fiscal policy and political credibility. The rating agency maintained the UK's AA- investment grade, but warned the outlook was now negative rather than stable, mirroring the action taken last week by its peer, S&P. Huawei, the Chinese technology group, is planning to relaunch 5G phones as soon as next year to overcome the stranglehold of U.S. sanctions and win back market share. The company is blacklisted by Washington from acquiring U.S. technology for 5G smartphones, but has been developing strategies to bypass the sanctions, according to media reports. Apple has asked suppliers to begin making some of its AirPods and Beats headphones in India as early as next year, according to a Nikkei Asia report on Wednesday. The talks mark the company's latest attempt to lower the risk of supply chain disruptions in China due to COVID lockdowns and increased U.S.-China trade tensions. Apple was reportedly in discussions in August to shift some of its Apple Watches, MacBooks, and HomePods to Vietnam, and it announced September it's assembling some of its flagship iPhone 14s in India. General Electric Company is laying off workers at its onshore wind unit as part of a plan to restructure and resize its business, according to Reuters. The sources that spoke to Reuters said the company has notified employees in North America, Latin America, the Middle East, and Africa about the cuts. It also plans to cut its onshore wind workforce at a later date in Europe and the Asia Pacific. For more on these headlines, we're going to talk to Efosa Aluyi, who is the head of investments at Sankore Global Investments. Efosa, good morning to you. Thank you so much for joining us. Starting with OPEC Plus.
Thanks for having me.
Great stuff. Is OPEC weaponizing energy?
Well, I mean, it could seem so to my mind, really. So, I mean, we're seeing crude oil prices at multi-year highs, right? We're seeing a number of members actually still struggling to meet, their production quotas. So, again, to my mind, I struggle to understand why, those production cuts are coming at this time. Although what OPEC is basically framing is to say that, essentially kind of like front-loading these cuts in anticipation of a significant slowdown next year. But I think that, crude oil prices at, 80 handles still seem quite sturdy and seem really good for the OPEC countries. But again, I think OPEC at the end of the day is just trying to look out for its interest. And in response to this, really, what the U.S. is probably doing right now is to order more release from its strategic petroleum reserve. Recall that earlier on this year, it released about 180 million barrels from that reserve. That reserve right now sits somewhere around 416 million. It's down about 32% year to date. Of the 180 million that was authorized earlier on in the year, they've managed to release about 145 million of that. So we expect further releases from the US SPR to try and cushion the impact of these production cuts by OPEC. But like you mentioned, really, the actual cuts will probably be something just slightly under a million barrels a day.
All right. Still on energy, what do you make of the EU? They're meeting today with a number of other allies to discuss this cap on Russian oil, but there seems to be some disunity.
I mean, at the end of the day, what the EU is trying to do is to pretty much, reduce the revenues that go to Russia that enables it to continue to, fund its war efforts in Ukraine. The truth of the matter is that if you're going to implement those caps, there are implications, there are cost implications, which a number of member nations are not willing to bear at this time. So I think those are the points of disagreements, particularly with Ursula von der Leyen. So it really remains to be seen how this would really be implemented, on a broad scale basis, particularly from the EU. Although suffice it to mention that EU's purchase of Russian oil has essentially collapsed. Right, it's basically India, China that have continued to pick up the slack at a steep discount. So effectively almost putting a cap really, on Russian crude. So really remains to be seen how this pans out, particularly because there are certain disagreements, within the group, as a matter of fact.
All right, I want to move to the UK and this negative outlook from Fitch. If an investor approaches you, Efosa at Sankore Global Investments, and asks about your outlook on the UK, what are you going to be saying?
I think, the question really that the market is asking right now, it's around competence. And it doesn't bode well that this administration just came into power. And then, the raft of fiscal support policies that were announced on the 23rd of September didn't quite sit well with markets. So on the one hand, you are essentially trying to fight inflation. That's the Bank of England. Inflation is at, multi-decade highs in the UK. And you're trying to bring that down, which essentially is the major focus, not just in the UK, but really for much of the West. And then you're implementing a raft of fiscal support policies, tax cuts, the likes of which we haven't seen in 50 years. These would certainly prove inflationary, right? So at the end of the day, what exactly is the focus? What are you trying to do? What are you trying to achieve? Fiscal policy has its place and it has what it does. Timing is also very crucial and extremely important. So I think that the market interpreted this as a really wrong move, and the time it didn't quite make sense. And this has led to a lot of issues, really, particularly in a period where interest rates are rising. So you're going to incur, significant fiscal deficits in a period where interest rates are rising. So of course, your fiscal situation becomes a bit more dire. And it's on the back of this that we're seeing, the outlook revised to negative. Although the government has, sort of rescinded, particularly, on the tax cuts. But again, the question remains: is this government competent? Do they know what they are doing?
Does Huawei know what it's doing? They're looking to possibly relaunch 5G phones. Can they outmaneuver those U.S. sanctions?
That's going to take quite some time, really. You can see that those sanctions have proven somewhat effective in, clipping Huawei's wings, if you will. I mean, Huawei before these sanctions was essentially on the ascendancy when it came to that 5G technology, but they pretty much almost disappeared into oblivion, if you will. So how they would be able to maneuver and sidestep some of those sanctions really remains to be seen. It's going to prove very difficult and very tough, such that by the time Huawei comes around, we're probably moving on to another spectrum of internet connectivity. It's going to prove really tough for Huawei to maneuver.
Efosa Aluyi, Head of Investments at Sankore Global Investments, appreciate your time. Thanks for taking us through the headlines. We appreciate your time and your insights very much.